Welcome to our deep dive into one of the most comprehensive funds available to investors, the Vanguard Total Stock Market ETF, also known as VTI. Whether you're a seasoned investor or new to the market, understanding VTI's role in your portfolio is crucial. Today, we're exploring what makes VTI an attractive investment option, its recent performance milestones, and how it compares to other ETFs like the S&P 500 ETF, VTI. Stay tuned as we also discuss strategies to diversify your investment portfolio beyond VTI. VTI isn't just any ETF, it's a gateway to the entire U.S. stock market, encapsulating the growth and opportunities of large, mid, small, and micro-cap stocks. But what sets it apart, and why should you consider it for your portfolio? Let's break it down. The Vanguard Total Stock Market ETF is designed to track the performance of the CRSP U.S. Total Market Index. With over 4,000 stocks in its portfolio, VTI offers unmatched diversification across various sectors, aiming to reduce risk while capturing the growth of the U.S. economy. VTI's broad diversification is its strength, but it's interesting to note that despite its wide range of holdings, its performance is often similar to more concentrated ETFs like VTI, which tracks the S&P 500. Recently, VTI hit a significant milestone, reaching a new 52-week high and showing a robust 33% growth from its low point. This surge is attributed to a strong earnings season, a resilient economy, and particularly, a boom in technology stocks. This performance is a testament to VTI's solid foundation and its capability to reflect the broader market's dynamics. With a minimal annual fee of just 0.03%, it's no wonder VTI remains a cornerstone in many investors' portfolios. Like all investments, VTI comes with its set of risks. Its maximum drawdown during the financial crisis was 55.45%, taking 760 trading sessions to recover. It's a stark reminder of the market's volatility and the importance of a long-term investment horizon. To mitigate risks, investors can consider diversifying beyond VTI. Options include fixed income ETFs like BND for steady income, international ETFs like VXUS for geographic diversity, and sector-specific ETFs for targeted investments. Commodities and real estate ETFs, like GLD and VNQ, respectively, offer additional layers of diversification. VTI stands out for its comprehensive exposure to the U.S. stock market, low fees, and solid performance track record. While it's a formidable option for broad market exposure, incorporating other assets into your portfolio can enhance diversification and potentially mitigate risks. Remember, every investor's journey is unique. Consider your financial goals, risk tolerance, and investment horizon before making any decisions. And as always, it's advisable to consult with a financial advisor to tailor a strategy that's right for you. Thank you for joining us for this in-depth look at the Vanguard Total Stock Market ETF. For more insights and analysis, don't forget to subscribe to our channel. Until next time, happy investing!